Hi everybody, welcome back. Today we are beginning Mastering Correction of Accounting Errors, which is your red workbook from the AIPB. And we will go over some of the major concepts within this workbook. So let's get started. To begin, we're going to discuss the type of accounting errors that could possibly occur. So let's go through those. Omission. Omission is exactly what it sounds like. So if you have a situation where a transaction occurred, but you didn't capture that transaction in the accounting records, then it was in fact omitted. Certainly that is an error and that would need to be accounted for. The next one on the list is accrual or deferral error. We learned all about that in the previous workbooks, so let's move on. Classification error is exactly what it sounds like. So your transaction, the recording of a transaction, was made using the incorrect account. So you may have charged your supplies to salaries. The amounts are in there, obviously, but they are being charged to the incorrect account. So that's a classification error. All right, next on the list is arithmetic error. That could happen quite often and in many different areas. For instance, you may add your cash receipts report incorrectly, total it incorrectly. You may add your certain expense, a listing of certain expenses, also incorrectly. Perhaps you've calculated a incorrect number for a special discount that you were given. All of these are errors and will result in a misstatement of your accounting record. Next is use of an incorrect accounting principle. So this is pretty important, and this is something the more experience you have under your belt, the easier it is to prevent these kind of errors. So, for instance, your workbook gives you the example under an incorrect accounting principle of expensing a transaction when in fact it should have been capitalized. So what does that mean? Well, as an example, if a business had purchased a piece of furniture that they were going to use in their office, and instead of charging it to a debit to furniture and fixtures, they debited supplies expense. Well, then their assets would be understated and their expenses would be overstated. Remember, our fixed assets, also known as plan assets, are those items that we capitalize. And they are usually the items that are intended to last greater than one operating cycle, or a year typically. They are usually used in the operations of the business and not expected to be converted to cash at all. So our furniture is used by our employees to conduct operations. Our machinery and equipment is used to help make maybe our product. Our building is where we house our employees, and our materials and things of that nature. Computers clearly are what we work off of. Those are the kinds of items that are capitalized. And by the way, remember that those items we capitalize, we do capture their use over time through the concept known as depreciation. And we'll cover that in one of the workbooks. I think, is it the fourth one? Remember, as you go through any of these workbooks and any of the material, if there's a concept that you don't remember from financial accounting or you're still having difficulty with, please post a question about it in the forum or email me directly, and I will try to explain it again to reinforce the concept, whether it's through another screencast or a posting, whatever I think will be most effective. So don't hesitate to do that. All right, moving right along. Use of an improper estimate. In accounting, we do use estimates for quite a few different areas in order to comply with GAAP and report revenue and expenses at the appropriate times. So when we use an estimate to calculate a number to place in our financials, maybe we misestimated, if that's a word, I'm not sure. But some of the areas which would be impacted by an estimate would be our allowance for doubtful accounts, our warranty claims, possibly inventory net realizable value issues. So those are things to keep in mind, and we'll probably see some of those in some questions. Right, transposition error is an error where you recorded a number, but you switched the place of 2 digits within that number. So for example, if you had to write the number or record the number 167, but you instead recorded 176. You switched the position of the 6 and the 7, which changes the amount and the value of the transaction. So that's called a transposition error. We're going to look into those further. A slide error, which is next, is also recording the wrong amount, but instead of switching the place value of 2 digits, you have moved the decimal place over. So if I needed to record $1,500 in my accounting system, and instead I recorded $150, I really moved the decimal over one place to the left, incorrectly recorded that amount. So last one on our list is a posting error. That is, you may have, your debits may equal your credits and you record an entry, but perhaps you debited or credited the incorrect account. So if we purchased supplies and we debited supplies $500 and credited cash $500, that would be the correct entry. But if we debited cash $500 and credited supplies while our entry is still in balance, and the system would allow us to make such an entry, we've posted incorrectly. That's the type of posting error they're speaking about here. So to kind of play off that last one a little bit, we know that our double entry system of accounting, where debits have to equal credits, it's a form of error check, right? It allows, we know debits have to equal credits. That's one method we can partially rely on to ensure that we've recorded things correctly, so that we know they're in balance. But as we saw with posting errors and slide errors and even transposition errors, it's not foolproof. We also have internal controls, which you're going to be studying in the last workbook of this course. So we'll discuss that more then. That's another system of procedures used to help prevent errors as well. None of these, or neither of these rather, are foolproof, so we have some more techniques available to us. We have the bank reconciliation, which I'm going to show you in the next screencast, and we also have, we're going to be looking at the trial balance. So that is what's to come for this workbook, and I will see you on the next screencast. Thanks.